Hi everyone. Today we'll be discussing how to determine the useful life of an asset. Before we move ahead, please click on the like button or subscribe to our channel. It's important to determine the useful life of an asset correctly because it's on this basis that the depreciation is being calculated. This will lead to an accurate depiction of the expenses during the period. It's also important to note that the relevant accounting standards must be followed to make sure that the financial statements are easily comparable. IAS 16 or International Accounting Standard 16 outlines the accounting treatment for most types of property, plant and equipment. The property, plant and equipment is initially measured at cost or using the revaluation model and is depreciated systematically over the useful life. IAS 16 states that the useful life of an asset is determined on the basis of the expected utility of this asset to the entity. The useful life is either of the following: the period over which the asset is expected to be available for use by an entity. For example, the management of a company expects that all vehicles purchased will have a useful life of 6 years and will no longer have any utility. Therefore, the useful life of the asset is 6 years and will be depreciated over this period. We can also determine the useful life of an asset based on the number of production or similar units expected to be obtained by that entity. For example, a toy manufacturing company may own a machine that assembles toys, and this machine can assemble 20,000 units over its life, after which it begins to have major maintenance problems, deeming it useless. Therefore, the useful life of the machine is for as long as it assembles 20,000 units and will be depreciated every year based on how many units it produces. So the useful life is specific to the individual asset and the individual entity. In the case of subsidiary companies, it's quite possible that the same type of asset might have different useful lives in the parent's books and the subsidiaries' books. IFRS 10 states that companies within the same group must follow the same accounting principles, and determining a useful life of an asset is not an accounting principle and is an accounting estimate, and therefore can vary from company to company. So it is possible for the parent and the subsidiary to hold the same asset for two different useful lives. However, in practice, it is quite common that the parent prescribes the useful life of all assets within the group, although it may not fully reflect the reality. It is widely accepted. This is done to make the accounting much more simpler. I hope this video brought some more clarity in understanding how to determine the useful life of an asset. Thank you all for listening.